welcome to the weekly review. So this week was frustrating as fuck. Like I had no idea what the hell was going on with things. Everything was behaving backwards basically, and I'll explain why. Meaning, okay, we had the FOMC and market dumped. Was the market really expecting a cut in March? They were retards to do so. So nothing really there, but we get a dump. Strange, but whatever. Then we then we get the um, jobs data on Friday, or not before that. We get a fake news that there's a peace deal between Israel and Hamas and oil dumps. But then we get confirmation that is not true and oil doesn't recover. Again, what the fuck is going on? And not only that, but it shows follow through down yesterday. So oil dropped what 5% on fake news and what the fuck. Okay, then on the day where the market dumped because JPA was bearish, quote unquote bearish, and gave a completely reasonable take in which we don't get cut in March. Uh, what happens with yields? Yields dump and continue dumping. So if yields were dropping because the market wasn't believing JPA, why were equities down? No fucking idea. And then yesterday we got the jobs data, yield spike like crazy, market goes up uh, on on 60% down volume. This was 80% at some point, but it recovered along the way, and 55 on Nasdaq. That's fine. It was because of the mega caps, but I honestly don't get it. We have news after news after news with layoffs, and earnings are great, jobs data is great. What's the problem? On top of this, it, it's it's just stupid the way the market is behaving. How it should behave in these circumstances: all news is good, earnings are good, employment is good, everything should go up. And I think what will happen moving forward is exactly that, but a bit more broadly than it has before. Bread has been shit. Let me put the bread indicator. I have two of those. One is this one, and we can see that in spite of this rally, uh, bread is much lower than it was, say, here. And this is a bad sign. In theory, it speaks of uh, a major pullback coming very soon. This is one bird indicator. The other one is this, and also high and now low. And when this happens, this usually means a substantial pullback is coming. I don't have a very great example. Maybe here, like it went higher, but Brett was slower. But anyway, what I'm getting that is not that the market should go down, is that the market should go up, and that includes oil, includes commodities, it includes Bitcoin and everything else, and it includes a lot more stock than have been going up. Not only mega cap should be going up, other stocks should be going up as well. And I posted a stock roundup video with individual names and explaining why individual names look very bullish to me. And this is mainly the reason why I think it goes up. But let's deconstruct this from on the other perspective as well. So the market did not believe JPA when he was bearish, even though stocks went down, bonds went up. And let's actually use TLT for this because it's more visible and I don't have to flip it in my head. So the market did not believe JPAL, so bonds went up, and on Friday bonds went down. But when we look at the 20-year yield, it's into resistance. Uh, it it this just seems like a retest of before resuming a trend. So something like this. This is fine. I thought until now that we will move in this range. We can just expand the range and the same type of behavior can be explained. Now this becomes the mid-range around here, and what I expect to happen is once again move in this range here. We can potentially bring this down as well, and just like this, the range changes, but it doesn't move. So in this scenario, more or less, what scares stocks is sudden moves that are unexpected. A range-bound bond market is not is first of all is not unexpected and won't surprise anybody. So the expected future for the bond market is chop. Maybe sometimes we get a hot print and it goes up. Maybe sometimes we get a cold print and it goes down. Blah blah blah. Nothing is happening. This is okay. This will allow stocks to go up. The problem is commodities. Like oil keeps getting hit and hit and hit every time it tries to go up. Um, and it's having a problem staying up. In my opinion, this is wrong. Oil should be going much higher from here, or not necessarily much higher, but like 90 should be quite reasonable to see given our current circumstances for oil. Anyway, something like at least 80, basically this range. Right now, we should be going to the top of the range, not staying near the lows. And I think this happens eventually, but it will take a bit longer and may take more consolidation in this low range. We had overnight the news of the U.S. attack in Libya and Iraq, so that probably is going to push oil up again on Monday. We shall see, but things should be going up, not down. Now back to SPY. This is what I drew for Friday. Didn't expect that very hot drop sprint, so we got a drop, but it still got saved and went to the target of 495. Now, a pullback is still in the cards. Not sure if it's going to be this low, but it could be like turn this into support like 492, 493. Then we continue going up, grinding up, and I think we see 498 sometime next week. Because earnings were so good for mega caps, I expect them to show continuation, especially for Meta. Meta and Amazon should be going higher. Maybe they do a pullback because they moved much higher, but over the next 2 or 3 days, what should happen is something like they pull back to, I don't know, let's say Friday's open. This is for Amazon, and pull back to Friday's open or at max to the gap start, and then they start going higher again. Amazon has a lot of room to go, potentially go to the all-time high as well with all the other mega caps who have already done so. So in spite of any very potential short-term pullbacks, I think this will stay bullish because earnings were that good, and over time they will. What did I do? They will keep going, grinding higher, and the same for Meta. So one support is going to be the open, the other support is going to be the gap start. How it played out the previous times. So they went into the gap but didn't fill it. It went into the gap here as well, but kind of the same approach. Let's see Nvidia. This open was here. It was between the low and the gap here. Did it have another breakaway move? SMCY did one recently. Anyway, you get the idea. So that's the maximum we can see. Um, I showed in the other video that there's a lot of bullishness in individual stock. I think Tesla, because it hasn't pushed lower uh, in the window of weakness, it won't push lower anymore and may see a bounce to 205 at least, maybe potentially a bit higher, uh, and then maybe do a double bottom on the next pullback. But for now, I think that the window of opportunity for pushing Tesla lower it has disappeared, and now it's a matter of going higher. Next week we also have China earnings with Baba, and if those are good, I think China blows up and goes crazy to the upside. If not, we get a retest of the lows. Apple had a very strong dip buy. Again, it can retest the lows, maybe go here. Just let's just say it's here. It should be the half point on the candle, something like this. 183.29 approximately is fine, good enough. So Apple can do a pullback to here, but then I think they all bounce and go higher. So mega caps won't drop. It's more likely that because mega caps won't drop, it's more likely that other stock will start joining in and make this rally have a bigger breath. And if this happens, we get another surge up and we go above 500. So the next 2 weeks are going to be one of the most bullish phases we've ever seen, most likely in the market. And first target would be 498. The other target I have beyond that, given that it's a new all-time high and we don't have any data, it's 511. So I think it's plausible we see even 511 in the next 2 weeks. And because this is OPEX, shorter, this how this is 504. So probably break out of this as well. Hopefully what happens. Yeah, probably double this, and that would be the target. So this is my target for the next 2 weeks, 511. I don't see mega caps stopping. I see all other stock joining in, and it should be a very bullish phase. We still have earnings next week for a lot of big companies. I expect those to be good as well. Maybe more layoffs are announced, and that's bullish for stocks. So it's not looking good for the bearish case at all. And even when the pullback comes, because it's everything will have broken out. Like from the other video, there's a lot of horizontal breakouts that are potentially happening in the next 2 weeks. If those horizontal breakouts happen, it's very unlikely that they don't show follow through. And even if we pull back, the pullback is going to be shallow, probably closer to 5% than 10%. And we go even higher. And the next window of uh, major weakness would be at March OPEX, not on this one. This one could be like 2-3%, maybe. Oh, sorry. Maybe turn 500 in. Let's say we get to here, and then we drop 98. How much would this be as a percentage? Like it's very little. 2.6, 2.7. It would be just like we had recently a very shallow pullback like this one here. This is possible. 2.4. There will be signs that it's getting very close to a major breakdown, and I will be looking out for them. If I see them becoming reality, I will call it out in my next videos and on Twitter. But until then, things are looking uber bullish. Is get the fuck out of the way and join the bulls. Yeah, that's it for this week. Have a good one. Bye bye.